Hi, welcome back to the channel. My name's Phil and this is Grow Your Dough. This is the 7th video now in the playlist, The Quality Momentum Blueprint. In the last video, we brought all of the buying process, the screening, the analysis, and the charting analysis together into the buying process. And so now we're into the maintenance phase of our investments, which involves tracking the parameters that we're interested in and then considering how, when, and why we sell. So today I want to introduce a tool that really helps me do that, which is my portfolio management tool on Google Finance. I've really simplified this as best as possible to make it as easy for you to use this in your process too. So today I'm going to walk through the whole process of installation of that tool and then how to use it. So let's get into it. Here we are at the Stockopedia homepage, and we're going to pick up where we left off at the end of the last video. We just completed the buying process. We had a set of 3 stocks in a portfolio called QM Shortlist. So let's load that up. So we had the Spanish stock that I can't pronounce, Barrick Mining, and the New York Times. I've also added a couple of Japanese stocks that I'm interested in, and so we've got 5 stocks in this portfolio. So if I buy these, I'm then into the maintenance phase of portfolio management. So how do I manage that day to day? What's going to be important to me to help me decide whether I'm going to continue holding or sell? So one of the most important things is going to be the price and the price in relation to my stop loss. I don't keep a stop loss fixed with my investments at the broker because if there is a stock market crash, I've already discussed, I don't sell, I wait until the stock market recovers before I decide what to do next. So I need a way of tracking what I call a notional stop loss against the price. And a way of doing that is using Google Spreadsheets. Google Spreadsheets has the ability to include a formula which allows you to retrieve price information around a stock such as Barrick Mining. If you give it the right ticker details, the exchange it's on and its ticker, it'll go away, find the price and pull it back in. And why is that useful? Well, because in another part of the spreadsheet, I can include a stop loss price, and then I can compare the stop loss price to the actual price and work out whether the price has zoomed away from my stop loss, which means I need to move my stop loss up, or whether it's below my stop loss, which might mean I need to sell it. So the Google spreadsheets offer a great deal of flexibility in that, and I can do things like color coding as information changes. So if I can periodically export data from Stockopedia and place it in the Google Finance spreadsheet, then I can track and put some logic in there, which helps to support me in my selling process and my selling logic. So let's go through the steps that are required to do that. So the first thing I'm going to do is I'm going to load up the Grow Your Dough portfolio tool template using the link that's in the description. You'll hit the page exactly like this. And what you'll notice when you hit the page, first of all, is this document is read-only. You can't do anything with it. We'll come on to what to do next in a moment. It contains an overview of the process that we're going to use to get this data out of Stockopedia and into the spreadsheet. There's going to be 2 phases to that. There's going to be like an installation and a setup where we need to put a few things in place. And then there's going to be the regular sort of process where we just transfer some data across and hit a button. On this first pass through, we'll also need to provide some permissions. We need to give permissions for the scripts running to tell Google spreadsheets that we know some scripts are running and that we trust them, or we don't, and then you don't use the tool if you don't trust them, which is fine. The process again is you've got a portfolio on Stockopedia. You export the data from a particular view, a custom table view. We'll look at that in a minute, but it's the data that I've been screening for really in a table view. You store that CSV on your computer, and then you upload it into a predetermined location on your Google Drive. You name the CSV file and a copy of this template that we're looking at now in a particular way. Hit the import button, grant it some permissions on the first pass, and then on subsequent times it will just pull the data in from the CSV file, look for tickers, and then go off to Google Finance to get some prices, and it'll update it. That's the process. And it might feel a little overwhelming, but what I've tried to do is break it down into stages. And each of these instruction stages has its own separate tab below. So let's just see if we can follow them through. Just before we could dive into the instructions, there's a bit of an overview for the data that you will find on each of the rows and the columns. There's only 3 fields that really you need to update, which is the latest Ichimoku signal, strong bearish, weak bullish, whichever it is. I can show you how we find that out later. The Ichimoku trend, is it bullish, consolidating or bearish? And the last thing is, what's your stop loss price? Where do you want to place your stop loss? But again, we'll look at that later. So let's make a start with the instructions. So you start off with the make a copy. So you'll notice up the top here that this is a read-only version of the Grow Your Dough portfolio tool. So what we do is we go File, Make a Copy. And you can choose where you want to put it. I'm going to put mine in video run through. It's warning you, saying that there's scripts associated with this. You might want to look at them to understand what it's doing, and you're more than welcome to. They're quite straightforward. The scripts basically are asking permission to add some menu items to the Google spreadsheet. It's asking for permissions to look in your file system to find the CSV file that we're going to upload. And it's also asking permissions to be able to modify cells within the portfolio itself, because it's going to be updating fields as things are calculated. So if you're happy with those ideas, we're going to say make a copy. Okay, so now we've got 2 versions. If you look at the tabs, we've got the Grow Your Dough portfolio tool, and we've got the copy of Grow Your Dough portfolio tool. I'm going to save confusion, I'm going to close the first one. So we've done the first stage, make a copy. So now we're going to go to the initial setup of Stockopedia. So we're going to click the link. So let's go back over to Stockopedia. And when you load a portfolio, it normally comes in on this table view of quotes, which gives you information about the latest price, etc., volume, some general information about it. And what I've done is I've taken one of the default screen views and I've customized it. I honestly cannot even remember what it was called before, but what I want you to do is find one of these that you use the least, which is least important to you. You can click on it. And then you can do customize. And in my custom table view, I use all 25 columns, and the list of all of the data and the order we need it in is contained in the instructions. And what you do, I'm going to pick another one for now. I'm going to pick performance, for example. You look at the items here. By default, you get name, ticker, and flag as the first 3 columns anyway. But the first field that we need to find is exchange. So I click in the search box and I type exchange. And I look for the exchange code. And it says, would you like to add this column? And you click add column. At the moment, it's added that at the bottom. You can grab it by the dots and just slide it up. Push it up to the top. And it could be because I need to fill all 25 fields, and 25 is the maximum you can have. It could be that you're going to have to delete some of the existing ones in here. So I'm going to show you that some of these are a little bit trickier. So for example, let's look at these EPS upgrade ones. I can search for EPS upgrade. And it's got a couple of different fields there. It's got the financial year 1 upgrades. And you've got 2 options. You can have the 1 month and the 3 month. Well, actually, we need both. So I'm going to write the 1 month first, search for it again. Financial year 1, and this time I'm going to take the 3 month one, and I'm going to search again for EPS upgrades, financial year 2, 1 month, and again, financial year 2, 3 months. So go through this whole list, add in the 25, making sure that you've got the fields appropriately selected. And then when you're ready, you click Apply Changes. You can also change the name if you want to change it to Custom or Grow Your Dough, whatever you want it to be, or you could leave it as it was. It's entirely up to you. But apply those changes, and then what you'll find is you'll have your view here with all of the fields that we're interested in for the spreadsheet. As a note, one of the fields that we include is the number of shares you own and the purchase price of that, the cost of how much it cost you to buy that. You don't have to include that if you don't want to. For example, if this is a spreadsheet where we're just vetting the QM shortlist, you're not going to have any shares in them yet anyway, because you might not have bought them. But if you want to have existing portfolio information about the percentage gain in this stock and share, then add the shares and costs. Whilst my script can read your CSV file, it's not transmitting any data to me about what you hold or how much your holdings are or how much your portfolio is. I have enough trouble managing my own portfolio. The last thing I need to worry about is how you're doing with yours. So I just want you to be aware that none of that information is provided to me. But if you don't want to transmit that information across, just don't include these last two fields, the shares and the cost. So what's next? Initial Google setup. Okay, so just open a tab and go to Google and click on the 3x3 grid in the top right hand corner and select Google Drive, and then click on My Drive. So when we do an upload of the CSV file, we need to tell the scripts where we're going to place them. The scripts are going to be expecting to find, they can't search everywhere for them. So what we're going to do is we're going to create a new folder and just call it Grow Your Dough, GYD, and we're going to place it in the root folder, the home folder. So the scripts will know now where to find your CSV files. That's where we're going to put them. So again, the instructions guide you through all of that. And we've done that, so we're on to exporting from Stockopedia. So we go back to Stockopedia. We've got our custom view selected. This is one of the gotchas you're going to have. You might sometimes come in and try to download and export with the wrong table view. You want it on the custom table view, and you want to download a CSV file. And if the name of your portfolio is QM shortlist, it will download a file called QM_shortlist_folio_Stockopedia to your downloads folder. And if you go there, you can click on this little icon in Windows. There's your file there. It's in your downloads folder. So again, the instructions show you what to do. Hit the download button, pick the CSV file, and it downloads it into your downloads section. So now we've got to try and get that over to Google. So go back to your Drive on Google again. If you can't find it, go to the Google homepage, Drive, My Drive. And we're going to navigate to your Grow the Dough folder, GYD. We're going to click the New File Upload, go to your Downloads folder, and pick the file that you've just downloaded off Stockopedia. You click Open, and it'll upload it. So now we've got the Stockopedia CSV file in Google Drive. Again, the instructions tell you what to do. Click on My Drive, go to your Grow Your Dough folder, click on a new file upload, select the file. So now we're on to getting close to the import stage. So now if you look at your file name here, currently it's called Copy of Grow Your Dough Portfolio Tool. And the way the script works is, depending on the name of this file, so at the moment it's Copy of Grow Your Dough Portfolio Tool, it will look for a corresponding CSV file in the Grow Your Dough folder that we've just created. But our file is called QM Shortlist Folio Stockopedia. So we want these to be the same name. Okay, so I'm going to change this to be, you just click on it, double click on it, and you can just type QM Shortlist. That's what I'm going to call this file now. And then I'm going to go back into Grow Your Dough Google Drive, and I'm going to click on the file, 3 arrows to the right, and I'm going to rename it. And I'm going to make the names match. QM shortlist. And click OK. So again, here it's telling you to rename the file to whatever you want it to be. In this example, it's ISA, and then I needed to change my fill folio Stockopedia name to be isa.csv. And we're there now, right? We're on the home straight. We're ready to click new buttons that have been added. So we're going to click import portfolio, and now it's going to try and run the script for the first time. And now Google Spreadsheets is warning you, you sure you want to do this? This thing is running some scripts. It's going to click OK. It's going to say, which account of yours are we going to use to do this? I've obscured my email address there because I don't particularly want my private email address all over the internet. So, what you'll see here is your Google account details. So you select whichever account you want to associate this with. It's saying, this can access sensitive information. Are you sure you want to do this? And it's actually listing your name. And the reason it's listing your name is when you copy the file, you copy the scripts and you become the owner of the script. So it's the scripts I've written, but it thinks you're the owner of them. You can click on Advanced, and it says continue only if you understand the risks and trust the developer, and it labels you. Okay, so again, to reiterate, my code needs permissions to create the menu button. It needs permissions to access your Google Drive file system to find the Grow Your Dough folder and find the CSV file with the same name as this spreadsheet. It also needs permissions to edit the fields within this spreadsheet once it's populated too. So that's what you're giving me permissions for. I'm not trying to access any of your data and send it across to myself or anything like that. I'm busy enough as it is. Thanks very much. If you're happy with that, you can go to Grow Your Dough Portfolio Import. Unsafe. It's still warning you. And when it does that, it's telling you what I'm trying to do. I need to have access to your file system, and I need to be able to edit your spreadsheets. And trust me, I'm not deleting your spreadsheets. You click both if you're happy and press continue. So in the background on the portfolio page, it's pulled in the data from the CSV file. It's already managed to pull the prices for the non-Japanese stocks from Google Finance. But it's saying I can't pull this information until you give me access, because it's trying to access some information from an external party to get that information. So if you're happy to do that, you can press allow access. When you press allow access, the Japanese prices update as well. And you can see now it feels a bit overwhelming at first, but I just want you to take a breath and stay with me on this, okay? Because I didn't populate any share information or any cost information, it doesn't know the values of the holdings here. But if you had populated that, it would have populated those two fields, and it would also calculate, given how many shares you've got and what the current share price is, how much that's worth. There's a base currency here. It defaults to British pound, but maybe if you're in US dollars, you want to change it to US dollars. It does some clever trickery behind the scenes here to work out what currency conversion it needs to do. And it will work out the gain in stock given the buy price and what the stock is valued at now. So you'll get that information. If you don't want to put that in, that's fine. You don't have to. So now we start to get into the meat of the spreadsheet and what it's actually doing. Okay, so there's a bit of cleverness behind the scenes in my spreadsheet. There's some lookup tables which say if this value is this, then do that. And they're hidden from you so that you don't see them. Okay, but one of the things it's doing is it's looking at the quality, value, and momentum rank and trying to work out, is this a super stock, a high flyer, or a value trap, or a falling star? My interpretation of that works on the value 80. So a stock is only a super stock in my world if its quality, value, and momentum rank is over 80. Whereas, for example, here, I'm calling Nihon Dengi a high flyer, but if we just quickly scoot across, Stockopedia thinks that's a super stock, which is fine. My code for evaluating that isn't as sophisticated as theirs, and I'm a bit stricter. So for example, if I change the value rank of this field, first of all, it's going to warn me, what are you doing editing this part of the spreadsheet? This isn't appropriate. Sorry, that should be 79, not 80. Then suddenly it's going to turn it into a high flyer rather than a super stock. And actually, if the value rank, if the quality rank drops to 60, say, it's going to say, uh-oh, it's a glamour trap. So as you're constantly refreshing this data from Stockopedia, it's going to be updating these fields and warning you that, by the way, this has gone from being a high flyer to being a glamour trap, or has gone like this. Say, for example, momentum ranks dropped. It's a falling star. You sure you want to be investing in this? So this is trying to help you. So I'm going to undo those changes. Next set of columns is valuations. Forward PE is traditional value investor stuff. PEG is about trying to evaluate the value of growth stocks, and the risk adjusted PEG is the same thing, but just accounting for the volatility of the shares. Next fields are around the EPS history and their estimates. Are they on a growth streak of providing EPS growth quarter on quarter? What was their last EPS growth percentage? Did they surprise the market by beating their EPS estimates last time round? For a lot of US stocks, this value is updated regularly and is really fresh. But you can see here for the Japanese stocks, this field doesn't tend to make sense. And in fact, if the value is 0, I put a little highlight on here just to say, careful, this stock didn't surprise the market last time round. You might find that it's only the US stocks that works particularly well on. Is this stock on an EPS upgrade streak? That's the EPS graph on the Stockopedia stock report that I look at first. I want to see that there's if it's streaking, there's no downgrades. It's 5 consecutive upgrades over time. This also highlights whether there's been any broker downgrades. So there may be 4, 10, 12 brokers covering this stock, and if 1 or 2 or 3 start marking them down, you'll start to see that flag signposted there, 3 downgrades. Oh, okay, that's interesting. What's going on there? Next 2 columns are around the price action. So the first one is price relative to the 50-day moving average. Have I moved a long way from it, or am I climbing above it? The next one is the 1 month relative strength of the share as well. Is it spiked up or is it falling? And you can see here that this one is highlighted purple. Nihon Dengi is highlighted purple. It's greater than 20. And if we have a quick look at that stock, you'll see that the share price has spiked up quite significantly recently. And actually the green line on that chart is the 50-day moving average as well. And so what I'm highlighting here is that there's been some strong price improvement. And in fact, if that goes over 22, if that goes over 20 as well, then it highlights both of them. And I'm going to look in a minute as to what sort of information is provided around that as well. What else? Earnings forecasts, 1 month, 3 month, 1 month, 3 month for financial year 1 to financial year 1 and financial year 2. And I try to derive a summary of that. Is this data good, neutral, or negative? So for example, if I mark this down to -5, then suddenly the outlook is negative. And it's highlighting that. If I put this at 0, it's neutral. So it's starting to give me, as I update the spreadsheet, it's starting to warn me about things like this by highlighting key things. So far, the really key things so far in the logic behind the scenes are the stock rank style and the summary of the outlook for the EPS. One of the things it can't do is work out the Ichimoku trend. So this is on you now. So what we would do is we would go to Nippon Carbide Industries and try and decide, primarily the most important one is this bullish, bearish, or consolidating? So let's go to Ichimoku Trader. I've already loaded up the ticker for this. Nippon Carbide. The last signal was a bullish, strong signal. Chikou has got loads of space. The future Kumo is bullish. Price action is above both moving averages. All 3 of them are above the cloud. This is clearly a bullish stock. So I select bullish. And straight away it tells me by default here now, you're probably safe putting the stop loss below the Kumo cloud. So one thing on ichimokutrader.com is if you come to these settings, you can then by default they're unticked like this, but you want them ticked on. And what that does, as you hover over the graph, the values for the Tenkan Kijutsu A and B and Chikou all get illuminated. So if I go to the latest bar here and I look at the base of the cloud, when the price is bullish, when the cloud is bullish, the bottom of the cloud is SSB. And the value for SSB is 2081.5. So I can put that in here, 2081.5. And the distance to stop says, that's 15.5% away. That's quite a long way away. Is that really where you want your stop loss, is what it's saying? So I might go, okay, that's not a bit too far away from me. So I might go 2100. No, still too far. 2150, still too far. 2200. Okay, it's 9.27. Let's go back to the chart. 2200 is about on this dotted line here. It's just, it'll warn us if the price starts to drop down. And realistically, the price is unlikely to just drop like a stone right through this cloud. It is probably more likely, if it's going to fail, to go back and forth a bit and drop through the cloud over here, which is around 2200. So having that 10% sort of value, 9.2% there, is helpful, because what will happen typically is if I mangle the share price a little bit, let's say the share price spikes up 2,600. Again, the spreadsheet is warning you, don't edit this part of the spreadsheet, but I'm doing it for information purposes. Look, I come in, just come home from work, I load up the spreadsheet. Wow, it's turned purple. Right, I need to move my stop loss up again. So I'm going up to 2350 or something like that. Yeah. So it's helpful to help me track my stop losses up each time. So I'm following the price up. And conversely, if we go back to as it was before, at 2200, and I change the share price so that it's dropping below that, so I could go 2150, I'm going to get a negative value. And if the price was above it but close, like I don't know, 2250, it goes amber. So I'm getting some sort of red is warning, amber is ooh, careful, and green is we're good. Okay, so by changing these parameters, the outlook summary, the trend, and the stock rank style will all have an impact on what happens with the stop position. So let me show you another example. Let's say the earnings got marked down. So suddenly now the stop position is suggesting that maybe you should use the Kijun-sen. That it's still a super stock. It's got high quality, high value and momentum. You're telling me it's bullish, but just as a warning sign, some analysts are starting to mark this down. So what it's saying is, let's move the stop loss from the base of the cloud up to the medium-term moving average. We're just going to try and still ride the trend, but we're just going to tighten it because we're starting to get some warning signs from analysts that the party might be over. What else could happen then? So what if the price didn't necessarily break down through our stop loss, but started to consolidate like it did here? What if the Chikou runs into the price action? Because we know that when the Chikou runs into the price action, we have to change this to say it's no longer bullish, it's consolidating. So now the logic says, look, I know it's still a super stock, but the analysts are marking it down, and now you're telling me it's consolidating. I'm not saying it's a definite sell, but if you've got a better option on your screener, then maybe you consider selling this stock and using it as a source of funds for the other one. So this spreadsheet is trying to help you a little bit. It's trying to nudge you and say, well, you're telling me it's consolidating. You don't like consolidating stocks. You might want to use this somewhere else. Who knows? The price might start appreciating again. Never break your stop loss and turn bullish again. And you say, okay, we'll go back to using the Kijinson, the medium term moving average. And then suddenly the analysts might fix the estimates and go, okay, we made a mistake. We actually are more positive about it than we thought. And then you go back to using the Kumo again. Hope that makes sense. What else can happen? What if suddenly we lose the EPS upgrade streak? Again, it's warning us. Need to keep an eye on this. It is strong. It's still a super stock. You're telling me it's still bullish, but it's lost its EPS upgrade streak. It's not been upgrading for a while. It's just warning you. Keep an eye on this one. Careful. What if it misses an analyst's estimate? You've missed the news. You've missed the share price dropping. But it comes through in the data that actually they missed an EPS estimate. It's warning you. Watch. Falling EPS. Why are we buying into a stock that can't hit its EPS targets? We want ones that are beating them. So it's saying it's still a super stock. The earnings estimates forecasts are looking good, and you're telling me it's bullish, but are you sure you want to be in this stock? What else can happen? Let's fill in some more details for Nihon Dengi, which is 1723. Last signal, strong bullish. The Chikou is not crashing into the price action, therefore it's bullish. Strong bullish, bullish. I can't remember what that figure was before, but I'm going to put it back as it was, positive. Let's think about where the stop loss should be. So it's saying underneath the Kuma. So for underneath the Kuma here, the stop loss is 5107.5. We're going to have the same problem. It's going to be quite a long way away. A long way away. So let's go 5,200. It's nowhere near. 6,000. Too much. 5.8. Okay, so let's say we set it at 5.8. And let's say the price spikes again. And that'll be reflected in these moving average figures. So it's gone up 25% above the moving average, and it's gone up 23% in a month. Suddenly it's saying Tenkan top slice. What does that mean? It's saying it's gone up so much you might want to think about a profit taking opportunity here. And it's saying you might want to consider using the fast moving average, the Tenkan Sen, as an indicator. So if we look up here, if it had gone up more, then the Tenkan-sen would be underneath the price action, because you can see here where it spurts up here, it shoots away from the Tenkan-sen, and the Tenkan-sen catches up. So if it goes on another spurt again, the Tenkan-sen would be underneath. And it could be that you just move the stop loss up along the Tenkan-sen like this. And then when it comes back through it, you go, okay, I'm going to take some profit. Doesn't mean you sell it all. It may be that you take your initial investment off the table, half the initial investment off the table. But what it's basically saying is in the short term, the price has been on a spurt, but is now sort of having a breath at the moment. And now might be a good time to just take some profit. And you could use the Tenkan-sen as that. It doesn't mean you sell it all. But what will happen then is over time, this will calm down a bit. These figures will go maybe 15, 15. And you could either move your stop loss back to the Kumo or just let the price just sort of come up to meet. Let over time the Kumo will be rising to meet up. It's just an indication saying the price has shot up. You could use another one of the Ichimoku averages to help you take some profit here. So this time I've just included some transaction data. Doesn't have to make sense. It's just some fields just to show you. So you can see the shares, number of shares have come in, the costs. It calculates the value of the current holding based on the number of shares and the current price, calculates the positive or negative gain. Seeing as I only just bought these today is what it's showing. Then there's marginal losses. Let me just input some data in here just to give you an idea. Just put any values in for the moment. Put a mix in just so you can see that they're restored. What I want to show you, and I just put just a number in. I just want to show you that the stop losses are there. So if you re-import the portfolio at a later date with updated data, all of the signals and the trends and the stop losses that you put in before are retained. They're not lost. You can hide the instructions because they take up quite a lot of room at the bottom, a bit distracting. They do take a while. Trust me, it does work. It just is a bit slow sometimes, he says confidently. And you can show them again. And hide them again, he says confidently. Come on, let's see if it'll work this time. Yep. I think that's pretty much it. This is the starting point. So I've been working on this one for so long it's gone dark outside. But I hope you start to get a flavor now of how the spreadsheet can help to enforce my discipline, can nudge me to remember my rules, can help me to notice the stop loss and the quality value and momentum behavior, the Ichimoku trend status, what the EPS estimates are like from the brokers. All of these things are consolidating now into the key information as to whether I buy, hold, or sell a stock. I would typically go through quickly and just have a look at the stop losses most evenings. You don't have to, but I'd be looking for the purple. Purple's good news, right? The price has moved away from the stop. So I'd be just gently nudging them up, looking at the Ichimoku charts. Where am I going to put the stop the next time? Maybe you might update the Stockopedia data by exporting the data from Stockopedia once a week, maybe. Quality, value, and momentum ranks don't change that often. The EPS estimates don't change that often. What tends to happen is the price moves more than anything else, and you know, the figures around the 1 month price movement or the price in relation to the 50-day moving average. That's the stuff that moves more often than not. So maybe you could do that once a week, and then you start to get an idea of what's going on then. And you're starting to get indicators from the portfolio tool as to, this is consolidating now. Should you be thinking about using this as a source of funds or changing your stop loss? I hope that's helpful, and I hope that you guys are able to access and install the tool and it isn't too problematic. I'm sure there will be little hiccups here and there. I'm trying to fix them as I find them. It's taken a lot of work, and I think it's going to be useful for me. I've been cutting and pasting manually for years, so now I've finally got a more automated process. I hope it will be helpful for me. And who knows, maybe people will suggest other ideas that we can do that will make things even better. I hope you enjoy the content. Please like, subscribe, share. Share with somebody who hasn't thought about investing before. Let's get more people investing, securing their future, growing their dough. It can be so liberating in terms of setting you free from a humdrum job or doing something that you don't enjoy. It can give you options and choices that can really enhance and enrich your life. If there's any other tools that I'm using that you like the look of, please, use the referral link if you can. That will really, really help me in terms of motivating me and keeping me working for you. Where next in the next video, I think I'll start looking at maybe some of the existing holdings I hold and reviewing them with you and saying, what's happening with this stock and what's my thought process. The markets are quite challenging at the moment. How come I'm not selling out when things dip? We can look at that too. But thanks for watching right to the end. I hope you enjoyed it, and I'll see you in the next one. Take care. Bye.